Every year, one number affects the retirement income of almost 70 million Americans. What is that number? Well, naturally, it's the cost of living adjustment for Social Security, which effectively is an increase in retirees' pensions. So what was that increase for 2024? We're going to talk about that along with 4 other changes to Social Security, which will impact the bottom line of not only those receiving benefits, but also every working American. Let's get into it right now. First, Medicare premiums. If you're currently enrolled in Medicare, chances are your Part B premium, that which goes toward doctor's visits and other outpatient care, is currently being deducted from your Social Security check. Well, last year, investors enjoyed a respite in that premium as it actually dropped. This year, unfortunately, the offset is back as Part B premiums are going to rise roughly $10, which will shave a little bit from that cost of living adjustment that we're receiving in our Social Security benefits that we'll talk about later in the video. Next, for people still working, Social Security taxes are rising. Social Security benefits are primarily funded by a 12.4% tax on most workers' income. If you have a job, you pay half that rate, 6.2%, via FICA withholding on your paycheck, and your employer pays the other half. If you're self-employed, you pay both shares. So that rate has been the same since 1990, but the amount of income subject to that tax changes annually with national wage trends. For instance, in 2023, you paid Social Security taxes on work income up to $160,200. This year, that threshold rises to $168,600. Earnings above that level are not taxed. So what does that mean? Well, let's give an example. Let's suppose in 2023 and 2024, you had the same income. Let's call that income $180,000. Well, last year, you'd pay your share of the FICA Social Security taxes, 6.2%, on the first $160,000 of that income, roughly $9,900 in taxes. This year, you'll pay the same tax rate, but up to $168,000 of income, which ultimately represents an increase in taxes you'll pay of $521, or double that if you're self-employed. Now, approximately 94% of Americans won't actually earn over $160,200 this year, so the increase in the taxable earnings cap won't affect them. But for the remaining 6% of high earners, this increase is a considerable added taxation. So where do those taxes actually go? Well, those taxes go to the Social Security program, which provides benefits to current recipients. But what if you're in both camps? What if you're currently receiving Social Security benefits, but you're also still working? That's a perfect segue into our next change for this year, which is changes to the earnings test. So first, what's the earnings test? Well, you may have already noticed, but a portion of your Social Security payment may be temporarily withheld based on what we call the earnings test. This applies to people who are currently collecting benefits, have not reached full retirement age, and have income over a certain level. So what is full retirement age? Well, of course, you can start receiving benefits as early as 62, but you'll become eligible for full retirement benefits once you hit your FRA, or full retirement age, which is determined by your birth year. As an example, people born between July 2nd, 1957 and May 1st, 1958 will hit full retirement age in 2024. So back to the earnings test. In 2024, if you're receiving Social Security benefits and you won't reach full retirement age until a later year, meaning you're born after May 1st, 1958, you'll have $1 withheld from your Social Security payment for every $2 in work income you have above $22,320. By example, if you have a $40,000 job, the first $22,320 in income won't be affected. The difference of $17,680 will reduce your Social Security amount by half, meaning an $8,840 reduction in your Social Security payment for the year. The numbers are a little different if you actually reach full retirement age in 2024, but either way, once you reach full retirement age, the earnings test expires and there's no longer any work-related reduction to your Social Security. Don't fret too much though. It's important to note that after you reach full retirement age, the Social Security Administration adjusts your benefit upward so that over time you recoup the prior withholding. So you ultimately do get that money back. Let's wrap up with the final 2 Social Security changes that are actually going to improve your retirement income potentially. First, the maximum monthly payment at full retirement age is climbing. This year, the maximum payout you could receive at full retirement age has risen by $195 to $3,822. So how exactly do you receive that maximum payout? Well, there's really 3 things to hit. First, you'll have to wait until your full retirement age to begin taking benefits. Again, we're not talking about 70, we're talking about full retirement age. At 70, you'll likely receive a higher payout, but that's a whole nother video. Secondly, you'll have to have worked for at least 35 years, as the Social Security Administration takes into account a worker's 35 highest inflation-adjusted years when calculating the benefit at full retirement age. And lastly, and oh by the way, you will have to have earned more than the maximum table earnings cap in each of those years, which, as we addressed earlier, is currently $168,600. But if you hit all three of those marks, you'll reach the highest maximum payout for Social Security at full retirement age. Finally, the number 67 million people look forward to each year, which potentially has the biggest effect on their retirement income. Wait for it, 3.2%. 3.2% is the cost of living adjustment, which increases each Social Security check compared to last year, which effectively is an increase in retirees' pension. So is that a good increase? Well, first off, it's much lower than last year's 8.7% raise. But that number was fueled by red-hot inflation from the previous year and was certainly an anomaly, as that 8.7% increase represented the largest adjustment in over 40 years. So inflation did cool considerably in 2023, but consumer prices still did go up, which is how we ended up with a 3.2% adjustment. Now, before we get too down on that increase being significantly lower than the 8.7% from the year before, consider this. Since the early 90s, the average increase in Social Security benefits is roughly 2.5%. So we're still considerably higher than that average. So what does this mean in terms of actual dollars? Well, this increase raises the estimated average monthly benefit by $59 to $1,970 per month. However, if you remember from earlier, the Medicare Part B premium increase was roughly $10. So at the end of the day, the net is an increase of roughly $49 to the average Social Security check. So, as discussed, annual changes to the Social Security program affect both current retirees who are receiving a benefit, as well as employees who are funding current liabilities, as well as building their own future benefit. If you're still with me, I want to sincerely thank you for sitting through the riveting world of 2024 Social Security changes. I very much appreciate that.